Hi everyone, today I'm going to briefly break down the top 4 Canadian dividend stocks to invest in. This is actually a rehash of a video I made almost 5 years ago. I picked these stocks initially due to their strong performance, future growth potential, and resilience in various economic conditions. I told everyone to invest in these same 4 stocks, and I'm going to go over the returns over the last 5 years to see what you missed out on if you didn't listen. I'll caveat this by saying I don't invest in any of these. I actually don't own any stock. If you've been watching any videos of my channel for the past few years, you know I'm able to make more off of options than stocks. That said, I'm recommending the more passive and the more reasonable approach, just invest in stocks, that I'm recommending. Just a heads up, I get the best feedback and response when I keep the reviews basic and at a beginner level. So you won't be getting a 20-minute overview of every company's financial statements. Also, please subscribe to the channel and like the video. Only 20% of my views are coming from subscribers, so hopefully I can pump that up a little. Before we get started, I've made a free ebook breaking down some Canadian finance and investing tips for beginners. If you're interested, I'll leave a link if you want to sign up for some freebies. And then obviously I'm going to use your email to market my Canadian finance course, which includes a one-on-one Zoom chat with me. Now, getting right into it, my first recommendation is Canadian National Resources, CNQ, not to be confused with Canadian National Railway, which is CNR. The current stock price is 104. They've gone up 36% over the last year. They have a 23-year dividend streak, and they've been increasing their dividends for 23 years. Canadian National Resources continues to be a top performer in the energy sector, and even when oil prices are low, the efficient operations still produce significant cash flow. Take a look at this 5-year chart. Not only has the stock been paying dividends over the last 5 years, but the stock has also gone up 200%. They've been increasing their dividends over the last 23 years. I always like recommending dividend stocks. It feels good to get the payment, but my ideal stocks are ones that increase their dividends. Looking at the current yield, it's not enticing. Like if you look at it right now and you're thinking, oh, it's only getting 2%. If I invest $100,000 into the stock, I'm only getting $2,000 in dividends a year. The issue is you need to look at it over the long term. Look at the dividends over the last few years, increasing from 58 cents per share to 75 cents to 85 to $1.05. So the return isn't perfect now, but it will get better the longer you hold. Also, depending on when you watch this video, these shares might be 52 instead of 104. They've recently announced a stock split. Basically, they're going to split each share into 2. If you own 100 at 104, you'll now own 200 at 52. I hope that makes sense. Second recommendation is a little controversial right now. Loblaw Company Limited, TSX symbol is just L. The current stock price is $157. They've gone up 28% over the last year. They've been paying dividends and increasing them for 10 years. Loblaws remains a cornerstone of the Canadian retail landscape. It is a defensive stock, meaning they're expected to maintain steady revenue growth even during an economic downturn, which we're not in right now, but it's good to know. The company and the owners are going through a rough time right now, mainly because they've been caught price fixing. The company almost has a monopoly on the entire Canadian grocery system, which sucks. The issue is, and why I'm still recommending this, is they'll get away with it. This will blow over the media cycle, and even society will find something new to complain about. I know I'm being negative, but there will be no repercussions. Sadly, these large corporations always get away with it, and they'll continue to perform well. Take a look at the last 5 years, this 5-year chart. Not only have they been paying dividends, but the stock has gone up over 125% over the last 5 years. Again, the yield is not enticing right now. Currently, it's 1.3%, but we're here for the dividend growth. Take a look at the last 3 years of dividend history, from 30 cents to 40 to 50 cents. This is a long-term hold. The dividends aren't appealing now, but hold this for the long term and you'll get the stock appreciation and some dividend increases as well. Third on the list is Dollarama. The ticker symbol, if you want to buy it, is DOL. The current stock price is $122 per share. They've gone up 45% over the last year. The dividend streak 11 years, and they've been growing for 10 years. Dollarama is another defensive stock. I'm noticing a trend here. They continue to be a dominant player in the discount retail sector. They've recently announced earnings having a 24% profit boost and then announcing that they'll increase their dividends by 30%. Can you imagine having owned these prior to that announcement? Take a look at the last 5-year chart. The price itself is up over 185%. And again, the dividend is not as enticing right now. It seems sad, only 0.3%. It would be hard to call this a dividend stock considering how low this is. However, they've been increasing their dividend for over 10 years. Well, actually, I think it's 10 years straight. The average income over the last 10 years is 11.6%, which is great. The payout ratio, which is how much of their cash flow that they're paying out, it's only 7.2%, meaning the dividend can continue to increase for the foreseeable future. Last up is TFI International. The ticker symbol is TFII. The current stock price is 181. They've gone up 23% over the last year. The dividend streak is 25 years and they've been increasing for 12 years. This is probably the best performing stock in the video so far. TFI is a transportation and logistics company. They've recently purchased a large company in the US, UPS Freight, which will help expansion and presence in the US. Looking at the last 5 years, the stock is up over 318%, all the while paying a quarterly dividend. Currently, the yield is 1.2%, but look at their dividend history. They've been paying dividends for 25 years, increasing for 12. The average dividend growth for the last 3 years is almost 21%, whereas the last 10 years is almost 10%, which again is near the highest on this list. This is another long-term hold. You'll get some stock appreciation and some dividend growth as well. All these stocks, I recommend buying them in a tax-sheltered account, either a TFSA or an RSP. If you want more information on these accounts, I've made videos previously and I'll leave a link if you're interested. I haven't decided if these are good for the FHSA, the First Home Savings Account. I want you to invest in these for retirement or living off the cash flow and the dividends. I'm not sure if these are ideal for a house down payment, but that's up to you and up to you, I guess, what you depend your time horizon is. That's all for this video. I kept it short, I kept it basic. Let me know if you have any questions and tune into the next one.